for time frame wise, I'm sharing you more from a principal angle. All right. So from a principal angle, the principle applies whether you are a position trader, swing trader, or even intraday trader. Right. So you mentioned earlier on that, okay, firstly, I want to address that point again. The time frame that you use shouldn't determine whether you should take a premature stop loss or not. Okay, so I hope we agree on that. Premature stop loss shouldn't happen regardless what kind of time frame you use.
Okay.
You have a stop loss, predetermined stop loss, follow that predetermined stop loss. That's it, full stop. No other question, no buts about that. Okay. So therefore, the use of the right time frame or the ideal time frame should not affect your stop loss. And what is the purpose of having identifying the ideal time frame? So if you do understand from a principal perspective, right? The lower the time frame you go, the more details you will see, right? You will see more of the details of the minor support resistance level, or you could even see certain trend line on an intraday basis if you go down to a smaller time frame. So just now when I asked you the question about typically when you get into a trade, how many minutes or hours does it take you before it usually hit your stop loss or your profit target? You mentioned a few minutes, right? So which means that typically your trade lasts only a few minutes, which means that obviously if you're using an hourly chart, it's out of point. There's no point using an hourly chart, okay?
And that's why it's a 1 minute, 3 minute and 5
yes,
minutes.
based on the length of time you typically hold your trade, the time frame you should be looking at should not be anything more than 1 minute. It should be 1 minute or even lower.